has occurred. Yes, having been popular. Yes, having been popular. Yes, having been popular. Yes, having been popular.
Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're all welcome to visit the Trader Lab. Can I please get a screen and audio check at YouTube and the Bookmap Discord Trader Lab chat? Thanks, Stephen. Thanks, Bernstein. Appreciate it. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only, and it is based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab chat, as well as a library of webinars and a community of like-minded traders who've come together to leverage their collective experience with the purpose of the Trader Lab to help traders understand how the market works, why it does what it does, and how to integrate a high-tier order flow tool like Bookmap in order to help with understanding behavior of the participants and potentially for getting into shorter time frame or fractal increments for triggers, trade management, etc. The other process that we work on is understanding how the market works, why it does what it does, and how you get in alignment, and build out a trade plan that is business oriented, aligned with the concept of gaming theory. The market is random. Participant behavior is random in the markets. We can't predict what will happen next, but if we have structured or vetted trades, we know if we can execute that plan and do the work. So we know we actually have a statistical edge, and then over time we can extract dollars from the gamblers. Again, assuming we do the work and we have the emotional discipline in order to execute. And these are all obstacles, of course, to mere mortals or humans who are emotionally attached and driven to execute. Casinos use the same process, however, they're not emotionally attached, and that is the big divider. The other thing is that casinos only play games that have a statistical edge. They don't change the games. If a gambler walks out with cash, they don't skip the next hand or do all the things we typically do. Obviously, if you play a game that has an edge and you have the discipline to accept the random outcome in the gaming business or even the casino business, then your job is just to keep playing the game, because only over a large random sample size are you able to extract those dollars from the gamblers. Now, the gamblers also walk out with cash. And this is the fallacy for many developing traders. They win. And of course, if we believe in statistics, even though they win, over time they lose. And this is how casinos are built. This is how they give you the cocktails, tickets to the buffet. And if you actually lose more money, maybe tickets to see Adele. That's the business of gaming. And it operates in a random environment because the cards coming out of the deck are random. The gamblers play the cards randomly. And we are in the same environment. So if you can make the connection, in my opinion, then it's about operating in that environment. Now, grab a pen and paper. I'll give you a couple statistics. I always like to go over this. And I want to thank TraderLab participants for all their contributions to the community. I could certainly not do this alone and without your help. There's just a lot to this. So let's look at the current RTH open. Let's take a look at Bookmap, and then we'll get into structured trades and other things that have come along during the day. So we had a gap, very exciting, gap out of yesterday's range. And that, for me, I'm going to tell you, was a surprise. I thought yesterday we had gotten sellers in there, we squeezed them out, and that we recovered nicely. Then we had the gap lower, which kind of rejects at this time that perception of value. And remember, the purpose of the market, it's not to get us. We get ourselves, in a random environment. The purpose of the market is to try to figure out what something is worth. So it's an auction process. And if you guys looked at the financial news, we know yesterday that rates crept up. And there's kind of a thinking, and something I've been thinking, that the odds of any Fed rate reduction, and I have discussed this with some other traders, in spite of what a Goldman Sachs or somebody says, everybody reads the same inputs. However, there's other elements at work, and if you understand, let's just say, the objectives of some of the big banks, if you will, and by the banks, I mean, like the Goldmans and someone else. It's not reflecting on them. But, these guys may be putting something out, and you may be seeing something on CNBC, but the market might say something else. Where is the truth? Well, for me, the truth has always been and always will be the market, because it's the participant behavior. It's not the verbiage coming out in the media machine. So for me, no rate cuts this year. And now the Fed has moved it back to December. Well, they're certainly not going to do anything. If they don't do it right away, they're not doing it in front of the election because they don't want to appear political. So maybe next year, maybe not at all. Who knows? So for me, I'm not looking for any rate cuts. And that's not the reason to do anything in the trading business. That's just a backdrop, okay? But again, yesterday's low was here, open lower. And then it's hasta la vista maybe for a while. So let's take a look at the opening trades. Now, statistics. I'm sorry, I diverged. We opened lower outside of yesterday's range. This sets up some statistics. So write these down. And past performance, not indicative of future results. You got to vet everything, no matter where, from whom, whatever. To get to the overnight volume point of control is an 85% probability. That's here. To get to the overnight low, a 70% probability. Now, there's the RTH open, so not a reach, but these statistics are not built on anything more than where we open relative to yesterday's range. It's the first piece. Taking out the first hour's high, which is called the IB high, which is somewhere in here. Right? Where's that IB high, guys? Can't find it. Oh, it's under here, IB high. Taking that out is 67% probability. Taking out the previous high or low. So, I'm sorry. Let me get you something a little better here. Whoa. Taking out the previous low. Now, that could mean filling the gap, right? 64% probability. Previous close, 43, it starts going down. Previous point of control, which is way above us, nada, 31%. And overnight high, 31%. We'll see you later on that one. not so much. And those are the ones that are relevant, okay? So the possibilities are open here. We have overnight low, not a surprise. By the way, this is an important level. This is 5286 is what's called the naked volume point of control. It's important because this was a retail price that we had left behind. And if you remember the big sell-off day we had, which was Thursday, I'm trying to remember when it was, last week I think it was, we came down and we filled the gap, which was, I think, here, this, and then this was the volume point of control from that day. And then we rejected it. I think we tested it in the ETH, and I think I had streamed that, but this is so long ago. It's all the way a week ago. So this was the gap fill, and this is the next level down naked volume point of control. So in theory, this has a possibility, maybe sometime in the world, we never know. We have the possibility of taking this out, which is the first hour's low, and coming here, and we can have two-sided trades. So that's possible. The other possibility is we open, we get shorts in here, we blow out the longs, and then we come back and get into yesterday's range. So we have, multiple possibilities, and nobody can predict, okay? So let's go take a look at the opening trades. And again, these are not recommendations. These are based on structured trades that are available to everyone at no cost in the Bookmap Discord TraderLab chat. And there's a library of webinars. Now, here's the thing about TraderLab, just a little thing. This is not plug and play. This is education to understand market mechanics. It is not predictive. It is always random. So if you have a trade plan, you're really waiting for the trades that are in alignment with how you define the conditions of the market. It is a conditional process. And one way to narrate this, if we're opening below this, which was a previous high volume area, and what high volume is, just to give you a little sense of it, why is high volume important? It's shopping. The market is made up of participants who are really shopping. And the reason they're shopping is to try to determine what's too high, what's too low. And they do it in all time frames or fractals. So, but for the day, that Thursday, this was the retail price. Now, the thing about it is, if we find a price is too low, we can leave it. If we come below it, we can check it. And you'll see how this works. Now, the fact that it's here, it's not a wall, it's a reference, because we don't know anything, Remember what else we know. We know about this. So if we take out the first hour's low and we get down under this low, which has stops under it, then the fuel will exist to get here. I just want you to remember that. So now let's get into the open. And by the way, if you have questions, please post them. And give a thumb up in YouTube if you're finding this interesting. I'm getting a question about where the statistics are. They're posted to the top of the TraderLab, as well as a library of webinars and documents that you can download. And if you're in TraderLab, you guys know there's no cost to be part of this community. No subscription, no monthly billing, nada. So the community has no cost. The resources, no cost. Me, no cost. Nada. Why? You have to make an investment in your career. You need to get high-tier tools if you want to be competitive. I've been using Bookmap since 2015. It provides insight. You'll see it here today. So it's about the plan, because a tool in the vacuum, it's almost like a wood carver. You give him a knife, doesn't know what to do with it. What good is the knife? So you need to know how to put pieces together and integrate them. That's what the Bookmap community is, and that's what TraderLab is all about. So let's take a look. This is the RTH Open. Now remember, high probability to take this out, and I can tell you it's this close. I'm not thinking about it. I am thinking about where I'm opening under here. So I know the market can come up and test this. I know the market could do whatever, or break down, right? So this is part of the joy. So I'm opening in kind of a funky area. So now when we open, we have a very aggressive trade. And I mean, I always suggest this is not where developing traders start. This is where developing traders hone their skill to read the nuance of the market. So this is called the developing volume point of control. It is high volume. Now it starts at 0 at RTH open, which is 8:30 Central my time. So let's take a look at this. This is the NQ. This is absorption. These are icebergs, sell stops, buy stops, and we'll have selling icebergs up above someplace. So we can see this. So now these are delta bubbles, and this is the delta over here. This shows me a lot of selling right here. So, and if the market doesn't go down, just so you know, there's a lot of selling. And where was it? Here. So if we get these early sellers and an iceberg took the other side of it and absorbed them. So this is kind of how I'm reading this. Now, that doesn't mean get long, get short, I mean anything. So right here, right before the open, we're getting buyers. Okay. Anyway, at least icebergs. And that in of itself is not a reason to do anything. It's the reason to pay attention. Developing volume point of control. Buyer here. No buyers above. Microstructure. Let's just follow it. This is not a trade. And this is the variable high volume node. Let's just watch the behavior. VPOC migration. Now this is extreme. This is why this trade is very difficult. So let's label this. Now there's no time to be doing these labelings and all this kind of stuff. You have to be reading it like a language. So too high, too low. And this is the shoppers. Now we've only been open not even 10 seconds. So you can understand this is not where you want to trade. You want to do is teach yourself how to read it. Develop unconscious competence. This is a good place to do it because this is like speed reading. I don't use indicators in the traditional sense. I do read the behavior of the participants. And for me, it's all volume based. So let's watch. So this is too low. And right now, this is the new retail price, high volume. I'm going to label it. It's a variable high volume node. I made all this up when I first started doing this. And this is a long time ago. It was not in the public space, as far as I know. At least I didn't know anything about it. Might have been. Nobody told me. Too low, retail. So what we got here is this. Oh, it's too low. This is now the retail price. Now, our structured trade, so you know, is as this is moving higher, this is support, micro. This is resistance. If I break above and pull back, it becomes support. Support. Just follow. Now, the idea is if this keeps pushing off, then, north. If I break below, so this is the structured trade, and I pull back and I can't clear it, then it's saying too high. It's not complicated. It's just, random. And then it sets up a short. So let's see what happens. Higher. Huh. Look at that. Huh. Here, this is microstructure. I have a buyer here. Now, right here, I'm looking at this, and I see my seller. I have a buyer stuck here, and I have a buyer here. This is a microstructure. It's not a short. It's my first indication that maybe I found a price, and this is a fractal. So this is sort of the way that I think of the stuff, multiple time frames, if you will, is Russian dolls. So the higher time frame, call that the big doll. And as you go down in time frame and structure, this is the developing daily time frame. This is the next level down. micro, or fractal. This tells me right here, maybe, and I don't know, this is too high. Not actionable. Let's watch. See? Not actionable. VPOC migration. You remember this, don't you? Let's label it. And there's one other piece. Now, watch. And this is the open. I always like to go over this because it covers all the concepts very quickly. And this is a retail price. And what do we want to see? Push off. This, clueless. Push off. What does it do? Push the other way. Maybe too high. Maybe structured trade in TraderLab for a short. Let's look. See it? So this is too high right there. This is a pullback to here. So watch. Too high, microstructure. This is advanced, guys. Back here, microstructure. Right here, buyers. You see your sellers. This is your short in here. The mere mortals like me, I'm looking at these levels to sell, but didn't happen. I broke under here, and I had my sellers. They're trapped. I had absorption here. This one's under the bus. See you later. And short. So this is a short. Now, right here, I see this liquidity come in. I see absorption. I see an iceberg. Stomach does a little of the flip. Now, anyway, it's the first trade was a short. So let me just follow it through for you. So we come down. Now I have down here, I'm looking at this liquidity. I'm looking at the gap. And I'm thinking, well, if I can get under there, I got this as my target. These are my targets for this short. So now it's trade management. So let's just look. So I got this here. I have icebergs going off here. I am looking at the icebergs and I'm not thrilled. Why am I not thrilled? Those are buyers. And these are limit orders in the book. You can see them. Okay. Just so you know. All right. And there's also icebergs that will execute at market too. And they'll pepper them in, bing, 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 algorithmic. They'll come in. So they can do that also. One. There's a lot of ways these guys can operate, but the limit order book is where we can see them. Okay. And of course, like everything, we don't know what's going on in the limit order book because they can pull, they can do whatever, So 748 icebergs are here. So here's what I see, and I call this a warning or put your antenna up moment. I see the buyers, the limit orders. I see the sellers being absorbed. That's what this is telling me. Absorption, icebergs. And this is where the icebergs were sitting in the book. We can see them, okay? Absorption. So this says, be aware of a potential reversal. Now the thing, and this is where order flow comes in, because if you're just looking at a bar chart, I don't know if anybody uses those anymore, but candles or, any of this stuff, Renkos, you can't see what's going on under the hood. You only see price. This is showing us market by order data, which is only available at CME data, and the orders are tagged, so it's called market by order. It is not just price, it is what is the tag. So we can see the difference between a sell stop and a buy iceberg. So they don't all look the same. So stops become market orders. These are buy limit orders. Anyway, just a little sidebar. So this is telling me be conscious as opposed to unconscious, and be aware of a possible reversal. Okay, now this comes down to trade management. Right here, you have decision to make. You can manage the trade, or you are holding the trade for larger targets. This is an individual choice regarding trade plan. So where do we come? VWAP mid. What was the last price that was too high? It's here. So this is over under. This can be over under also. Look at the alignment. Look where we come. Is everybody tracking? This is TraderLab. Now, there's no magic bullet. or silver bullet to kill the wolf. But, anyway, so let's remember absorption. This is structure. Too high. What do I see coming down here? The absorption again. Same as over here. This is, again, my antenna goes back up. It's like, oh, come on, stop it. You ever talk to the market? You should hear what I say over here. 1,000 here, 800 here. So this is a warning issue for me. So if I'm still short, I have my choices. I can be, once this drops down, I have this, I have my sellers, I have my icebergs, I see my buyer. I can be out of this trade here because I'm crossing over and I know there's stops above the mid. So I would be out of the trade. So that would be the end of that thing. Now, what? Well, let's go take a look. What are our statistics? Let's come back. First of all, this is important. We haven't tested this yet in the RTH, so that's a level. Overnight VPOC. Well, I got this one here. I don't know. Hold on a second. I don't have these on my chart anymore. Where the full session VWAP was at the time, or the overnight VWAP. This is the full session, so it's not the same. It's current. I think overnight VPOC. Remember that statistic, about 85% probability. You have to vet these for yourself. Past performance, not indicative results. So the idea here is, here there was an overnight VPOC. Don't know where it is. It's not on my chart here, and I can't go looking for it. This is also a target. So this is a key target. This is a tertiary target, and yesterday's low is a target also to fill the gap, right? So you guys all know that. This is common stuff. So let's go take a look. So I see buyers here, okay, in absorption. So I don't know where the low of the day is, and currently this is the low. And I also know we can come out the bottom. Don't know if we will. I don't predict. Wish I had a crystal ball. Still, I had a magic 8-ball on the trade desk years ago. Never helped. So this is the outside edge. And it quite often will come out and test, So let's look here, microstructure. Let's come back. Too high. This is a short in the TraderLab, mean reversion. Now, what is mean? Now, this is multiple time frame thinking, guys. This is too high. This is potentially too low. We come outside. It's right here. We're consolidating. And what a consolidation is mean reversion. So it's outside it. Subject to your plan, understanding and notwithstanding this. This is a TraderLab short out here, right? There to there to here. Hold on one second. Okay, sorry guys. So this could be a short from here to here. And then you're looking at this. There's your sellers. They are absorbed. 275 sell stops. That's a stops right under this low. Okay. We pop across again. So this is what's called mean reversion. It's a consolidation. Now, the thing you got to be aware of with this structure is that in consolidations, you've got sellers here, right? And we got buyers here. These guys get picked off. 275 stops here. If we don't get selling below here, this is really a liquidity grab. It's just what I call stop pick. All right. And when you see the buying, that's an indication of get out of your short. And as they say, go to ground, just park. Because in consolidations, what you have is buy stops here and then sell stops here. So the market can come out and then come back. This is mean reversion. So it's the same thing. It's basically out, in, out, in, out, in, that kind of thing, okay? So it's this. And whoever's wrong is going to get run over. Looks like we might come out the bottom. We'll see. So once we break out of this, our next target is going to be here. So now for me, right in here, I didn't have anything to do until once, I mean, other than the scalps, once we came above this. So here actually, because this one was too high. So this one here is my perception of resistance. I come out, then I have a choice. I can look for a place to get long. And remember what this was. This was the other location. So this is resistance. If I break above it, then I can look against this. Let's just see what it does. See where we come? This is this location. If I break above it, and this is a little more advanced, this is TraderLab structured trade. If you pull back here, and there's your absorption, outside edge of the developing distribution. Let me tell you what this really says. This is language. If this is your consolidation here, right here, and we break out of it, it leaves something called the low volume node. A low volume node is where it didn't auction. It just rips. And what it's doing is all the fuel that was built up here is being taken out. All these stops. You know, thanks for playing. Your broker sends you a gift basket. So at the moment, this is too low, and this is the breakout. When it accelerates, it leaves this. So we know now this is support. The LVN is poorly auctioned. And then we break into this. Let me show you what it looks like as it happens. So right now you just got this thing going on, right? It breaks out. Now you accelerate away. Accelerate. Watch it develop. This was a key location and a potential target, if you remember. This variable high volume node is too low. Just watch the pieces. This micro high volume right here, where we is another consolidation. It's just smaller, but it has its own high volume node right there. So in here, this now is a new retail price. This one's too low. This one we rejected. Acceleration, pause, chop, alignment. I know, a lot of pieces. And now this. High volume. This high volume is a fractal, same as this. It's all the same. It's just Russian doll. So this is a littler one. But it's same behavior. Too high, too low. And the other piece here is this. That's why we potentially pause. If we get above this, it sets up the next targets above. Now this, though, is your location. And this is your low volume outside edge. And this is your support. Let's look now. So I got support here, microstructure, more important support here, and low volume zone in here, which can be traded into. So let's watch. So support in the microstructure here, low volume outside edge here, support here. So this is a long watch. And now, what's our next statistic? I know. This. 85% probability. Past performance not indicative of future results. Now, what would happen here? You take a stop, and then, I mean, this is what happens. You would take a stop if you didn't get risk neutral, which you may or may not, subject to your plan, right? Let's assume you didn't. If we pull back to VWAP, and what is it? VHVN. So here's the thing. How do you trade this? Let me show you. It's all a matter of your trade plan. This is what you're going to lean on for your long out here. And where does the trade fail? VHVN outside edge, low volume. This is what is funky in trading. Do you know where your trade fails? You see? So when I'm doing this, I'm looking at triggers, I'm looking at structure, but I'm looking at volume because the volume tells me a shopping experience. The structure of a low volume node is a weak structure. The market often comes into these things. So I know this is my outside edge because it's a pricing. See, this is the logic of all this. This is what at one point, it's like support resistance if you want to think about it. What was too high is resistance in your world. Well, volume is resistance in my world. And the old thing is resistance can become support, right? You know that. There it is. So this, if you weren't long, is a long. VWAP, variable high volume node, and test into this unauctioned area. Or you got long up here, your stop needs to be under here. If it doesn't fit, you can't take the trade. I'm just showing you structure. You, in the TraderLab, what our TraderLab participants do is I always say, you take these structured trades, you reverse engineer them. And here's the other part about this. It's random. It didn't have to come here, right? It could have just held here. So this is the joy. This is when you operate in a random environment, you can't predict what will happen. So what I do is I assume the worst. It protects me mentally. That's one part. The other part is I look at levels of behavior because I know why. I don't know if, I don't know when, I know nothing. And by the way, write that down. You know nothing because knowing means you can predict. If you accept that it's random, you can claim to know nothing. You know randomness. You know probabilities. You don't know the outcome of the next rotation or trade. It's up to you. I found for me that I was actually under the illusion that I knew what was going to happen because I grew up when I first started learning the trade, it was at CME. And back then we didn't have candles or anything. It was classical bar charting and that was all measured moves. So I kind of came from a place of predicting, with classical bar charts, the usual stuff, flags, pennants, measured, all that jazz, whatever, triangles, rectangles, name it. So anyway, support, long, target, got it? Now, where's yesterday's low? Let me just find that because fill in the gap is somewhere in here. Here, next target. So this is the long to here, to here. And now comes the fun. Now here, let's go back to yesterday's low statistically. And I'm going to look at your questions. Thanks for your patience. I'm just trying to get to the first sequence of longs. Well, the first short and then the long. Previous low, 64% probability in this context. Past performance, not indicative of future results. You got to vet these. And then we're going to have a short up here, but that's besides the point. Questions, guys? How we doing, guys? How we doing in YouTube? I hope you're getting something out of this. Give a thumb up. And if you have questions, please post them or any comments. It's always helpful. And if you have ideas or suggestions, I would be glad to entertain them. So, since I don't see any further questions at the moment, let's move on. So you fill the gap. Now, here's the thing. This had a high probability. This is 64% probability. Now, the statistics really go, as they say, downhill. Overnight mid, though, this was my next target on the long. 68% probability. Now, that's still out there. Doesn't mean anything. It's there. But now let's look at a short. Now, I don't know. I live in the world of clueless. So let's look at this. So that's our long and, this, and fill the gap. Now, on a gap fill, there's a couple of things, right? Well, I have this, don't forget. So I'm looking at this and I'm going, well, if we fill the gap, profit taking is likely on a gap fill. And if I see selling, now I'm going to take you to microstructure, I might get a mean reversion trade. Maybe, the joy of trading is it's all maybe. And maybe we're going to fall out the bottom, by the way. That's also on the list for today. And don't forget, we have a target. Although I already showed you at the top of the stream, we have targets below the first hour's low, which may or may not, come into the play. So let's go back here and now look at this. So we filled the gap. Who knows? What? Hold on here. Sorry, I'm taking a look at the current market. Got to see what's going on. Wow. My mind. Buyer, iceberg, buy stops. So let's look at this thing. There's your acceleration up. Buy stops, that's a squeeze. Buyers, we are holding these sellers here, stuck. Buyers, micro high volume right here. I'm going to show you a fractal just so you can kind of see what it looks like. The volume is here. So let's look at what we have. Now this is volume, but we're not going to look at that. Acceleration, pullback. This is a consolidation or a fractal. In this behavior is the volume. It's right there. And that's that chop, 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 chop. It's a consolidation. Now you see sellers here. Now, the thing about buying icebergs, so these sellers are being absorbed by these buyers, okay? And we have not filled the gap yet. So, who's selling this? I don't know. So, buyers, so this is too low. Now I come up and I start this chop again. I'm taking you into micro, and I'm at a key location right here. But I have not filled the gap. Watch. High volume. So this volume in this consolidation, which is created by this, you can actually read this, and it creates this little micro high volume node. It's here. If this acts the same as a volume point of control or a VHVN, all these are the same process. This is going down into a shorter fractal or time frame. Remember Russian doll. So this is too low. I don't know it's too low until we break above it. Same process as the shorts I showed you at the top of the stream. All about VHVNs. This is a micro VHVN. That's all it is. Same process. Once you understand the language of the market and participant behavior, I don't use any indicators. So the reason is this is my quote indication of behavior. So that's what I'm doing. Break away. Too low. Seller's trap. Now let's move on. Where do I come back and test? This is your high volume node. Too low. So chop, chop, chop is high volume. Break high is a trigger. Pull back is the entry. It's not an entry, but what it is a trade management process. Okay. So I'm using triggers and structure potentially for trade management. And it's not a recommendation. I'm giving you the idea of TraderLab is to help you read the market. Then you break it down into the time frame or fractal you want to operate in. So let's look. So too low, break high. Pull back. What's going on here? Hold on, guys. Fire alarm's going off over here. Not literally. Okay, got to get this off. Okay, sorry. We pull back. Here's your entry, or not entry. This would be an entry if it was in a different location. Okay, this is a structured trigger, but you can use them in different ways. you could use it for trade management because this is too low. This confirms it's too low, and we break away. This was too high. It now becomes, and there's the high volume here. There. Micro high volume. So what is this? Too high. What's this? Too low. Too low. Too high. Break high. Too low. Resistance becomes support. This is just a little sidebar, guys. So watch. Now we fill the gap. This is support.
Yes.
Sorry, I'm getting distracted a little bit, guys. Micro high volume. Now this becomes important. Location, 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 real estate. Selling iceberg. Let's look at the pieces. Absorption here. This is the iceberg. This is a limit order. The iceberg is executing here. Thank you so much. More iceberg selling here. Here's another little piece that I look at. Notice as we're coming up 120 buy stops. This is to stop an iceberg detector. For me, it's very important. I get my delta, my buying, 42 stops going off. 1, 2. You notice a difference? 70, 1, 2, 2. Where's my aggressor? Right here. Where's my volume? There. Is everybody tracking? I'm following a process. I am clueless, but I can read it, and I'm in real time using order flow. You see? Yeah, guys, please hit the like button. So right here, this is what I call divergence. You remember that. Stop divergence. 70. Oh, my goodness, it's the end of the planet. 1, where'd the buyers go? Are there initiative buyers, or is it a squeeze? 2 buy stops. 2 buy stops. Where's my buyers? And now, remember, buy stops become market orders. That's why we see the delta. But where's my movement? If it's only stops and probably some buyers, but look at the iceberg. So I've got the iceberg. I'm spending my time here. I want you to see microstructure. Think Russian dolls. This is a little Russian doll. Now, nobody predicts anything, but what is this? Look, consolidation, high volume, fill the gap, go into the moon, Alice. Maybe, watch, high volume, break away from the volume, watch. Testing the volume, short. Testing the volume, end of the world, short. Look at the dual structure here. This is a beauty. Screenshot this, TraderLab. Microstructure here. Seller, pullback. This is the first indication of a short because you see the seller. Now, if you didn't execute here, which is fine, because this takes a lot of practice and unconscious competence, but let's assume you missed this. And now you're doing all those things that we all do. Me, you don't want to sit next to me. Where was it too high? This is where the volume is, right? I'm taking you into fractal. This is how you can work it in TraderLab. This is a short. Stop is over here. You put your helmet on. Liquidity comes into the book. You see it? So you got some alignment. You have exhaustion, stop divergence, and you got absorption. You got everything going on here. that's a short anyway. So there you go. Now, where are you trying to go with this thing? VWAP in mid. Huh. There you go. Shows you what I know. I don't even know where we are. There's other trades in here, by the way. I got to show you another one or two. I got to check something here. Hold on, guys. Right now, and this is not a recommendation in the current market. Let me look a little closer here. Your resistance is up around 92-ish. Not a recommendation. We're kind of in the area. And don't forget, we have the overnight mid stat at 53.02, which has a 68% probability. Not a recommendation. Okay, just so you know. This is the IB high. And there's a couple possibilities here. There's two trades in over here. Now, the problem is this is the gap. So one of them is called the IB continuation trade, which is not, for me, would be very problematic in this context because, and it's a long, but you only got this. You want to get long from, this area to here. Me, doesn't fit. Now, being long from lower, no problem, you see. But to initiate is a problem. We have another trade in TraderLab called the IB failure. It's a short. I'm going to show you that one. Now, you noticed the short for me is here because this is what you can develop. But let's assume you're a developing trader. This is kind of where you got to be thinking. You test into the range, it's rejected. So the short side makes sense. Your short would be here, remember, on the test. So here, back here, break, pull back. This right in here is a short. It's called the IBF. And the target, it's a mean reversion trade. The target's the VPOC, mid, VWAP, MEPOC. This. So that's this trade. This is called the IB failure, and it's in the downloads that are available to all of you guys at no cost. A structured trades, there's 60 PDFs. So this is the primary target from the IB short. Now, let me see where we are here. We got anything else going? We have now reverted, and we're in two-sided trade potentially. I'm going to give you a level. I think I just did. I said it's around 93 maybe. Oh, remember? I don't even know because I can't remember. So we want to watch this 92, half 93 in the current market, okay? Not a recommendation. They're just levels to observe. So let's watch here. And I'm going to stress, we're just looking at behavior, nothing else. This is at the moment mean reversion. That would set this up potentially to do one of these deals. So let's watch right here. Just see what we can see. And if you have questions, post them. These are not trade recommendations. I'm only looking at behavior. And it's in here. So let's see. We got a buyer here. Buy stops. We got a selling iceberg fiddling in here. I don't have much in the order book. So the only thing I would get is a buyer stuck here and maybe some exhaustion. Let's see what happens. Now we're going to go down into microstructure. We're going to watch this microstructure here. Just want to see. We're just tourists. It could pop. It could do anything. Watch the behavior right here. And post your questions, guys. And please give a thumb up in YouTube if you're finding this interesting. Drop some comments. These are not trade recommendations because I'm just showing you levels. I'm not, and these are not, this is not a structured trade in the TraderLab. Stops are sitting here, here, and of course over here. So we can pop, reverse, or just keep going, right? So let's watch. This is at the moment mean reversion. Mean reversion is mean, and we laugh about it in some ways because you're trying to pick an outside edge. The more conservative way to be trading mean reversion is to let it come out and break and then trade the test versus trying to get into this thing. Because you could get a head fake and then it blasts. So there's two ways to handle this potential short. Now you have to always look left. Where's the stops? Here, here. And then the volume, you look up here, the volume is there. So this is micro resistance. This area is resistance. Let's watch it. So there's too high. Here's developing too high. Micro consolidation. Let's see it. Now, this is not, see, I'm not encouraging anybody to trade like this. But what I'm going to suggest is if you can learn to read, this is language. So if you can learn to read where behavior might take place and then understand market mechanics, you might be able to operate in it. So here's our 93. Here's our high volume. Let's see what happens here. I don't have anything here, so at the moment, let's watch. No, nothing going on yet. One second. Okay. Overnight volume point of control, important. High volume here. Now, if we come back above here, it sets everything else up back above, potentially. So we'll have to see what it does here. High volume area, right here. So we had, I think it was it 93 or 92? I can't remember. I think it was here, wasn't it? I can't remember where that other location was. So let's watch here. Now, these are just microstructures. There's nothing to do with these yet. Volume is here. A little exhaustion there. Buyer is here. Sellers activated here. You have a buyer here. I got more sellers. So either these sellers are going to get stuck or this buyer's stuck. If we can get above here, then it's the sellers that are under the bus. So in a microstructure, you can read what's going on in here. This is a key location. It's also the IB, right? I think it is. Yes, it is. So this is an important location right here. We can pop this and then revert or continue. So let's watch. Important structure here. Volume is here. So there's alignment at the moment. IB, overnight volume point of control. This is potentially a mean reversion structure. You have to be conscious that we have a statistic up above us, and if we get into the range, then the overnight mid is the target. So that's what you need to know. So with this structure here, the thing about this is, and this is not a recommendation, if you got involved, your stop could be very tight because the pay is to come back here if it does. So let's see what happens here. Hold on again. Remember, guys, I don't call trades. So what you're looking for in this trade, it's a mean reversion trade. It is called the IB failure, and it is a retracement to here and a potential short. And it's outside in trading. This is a specific trade plan in TraderLab. You know, so the 93. Remember, I think it was 93. I don't know what it was, but it was. I'm looking for this trade. But the location, if you're looking for structured trade, which is what you should be doing if you're in TraderLab, and then you have to vet them, is this. The short is here. You need to get scaled. Your stop stays up here, and you're going to get taken out. You're going to scratch or put a burger in the basket, or it's going to come here because this is the structure, mean reversion. Is everybody tracking? There's some liquidity in the book. This is a little push. This is like putting a little lid on the pot, Are you guys following? Is this making some sense? Now, this is algorithmic. You see they're pulling and they're coming down over here. They could push this up into these stops. That's why you got to get risk neutral. And we'll see what it does. Nobody knows. Part of the joy. High volume is here. So let's watch the behavior. Okay? Questions, guys? And thanks for your patience. This is TraderLab. This is structured trading. No magic bullet. Still looking for it. But in the meantime, yeah, please hit the like button and leave comments. If you have questions, ask them. Most of the questions can be answered in the Bookmap Discord TraderLab chat. It's a community of traders looking to leverage their experience. Watch this algorithmic behavior here. It's push. This is NQ, correlation. I can watch the NQ behavior. You notice the NQ is going up. So what do we want to see? NQ go down. If this keeps going up, that's giving you an idea that this thing has the potential to go. They're pulling up here. They're pushing from here. So this is algo. You can't do anything with an algo. It's computer operated. Notice how they pull? So this trade, if you put this trade on, you got to get risk neutral. Stops are above here. See, the buyers are eating up these sellers at the moment. So we got to see the behavior. High volume is right there. So let's see. If your NQ can roll over here, that helps. If this is going up, then that's going to pull. So you can kind of keep an eye on it. Market Pulse, which is part of the Bookmap suite of add-ons. And I don't use this, but it is an overbought, oversold. It's volume, pressure, imbalance. So it's an algo. And don't let the word algo mean there's a mathematical formula. So if this thing is going down, it's going to be doing it soon or nada. And it's got to clear 92 to go lower, in my opinion. This consolidation here. This is where the buyers got trapped, okay? So for this to go down, it's got to get through here. If not, this is micro volume, and it's too low. We pushed away from it. And this is where the test would be if we come back. So we want to watch. Now, it could just blow up here, So we'll see what it does. 85 in LVN. I can't, if it's your setup and you vetted it, then that's what you would do. You know, I'm basically, I prioritize high volume in what I do, because of what it represents. And a low volume node is not necessary. It's an area to be tested because it's not auctioned. Low volume areas are on outside edges of consolidations. Like this is a low volume area. Out here is a low volume area. If we come out, we take the stops. Remember, the outside edge of a consolidation. And then if you come back and you can cross over, then you can come to the other side. That's what creates these rotations. This is a microstructure here. And I'm saying is low volume is right now. Here, let me just try to show you. This is a short, by the way. It makes you want to lose your lunch, right? Because this is what we're leaning on. I can't quote predict because if I could, I would skip the trades where I take stops. I would like to do that, but I've given up on prediction. This looks like it's going to go higher, and because I see what's going on here with the order book, you see them pulling. So, but it can come down here too, So I've got two things. I've got this, which is too low. You see? Why? Look where I came. Broke out. Short, right? Short, we're looking at. And where's my support? This. I can't get below here, then this. That's what I know. I don't know what it'll do. So I know I got to get under here. And right now it looks like the buyers came for it. The buyers came for it. This looks like it's too low. So this trade looks like it's going away. You notice how they're opening up over here. So this trade looks like it's going to go higher. Okay? And if we could remember, if we take the high out, we have this. So this is our target if we get rolling to the upside. But we got to clear this. And there are stops over the high, right? So we'll see what it does. But the thing is, if this is too high and you get your seller and this is too low, you can narrate it and then you can act accordingly. When this comes back, if it doesn't break down again, then you know your short would be in trouble. And that's because of what happened here. So now we got to watch again, see the behavior. $95-ish is microstructure behavior, but it looks like we're yeah, well, we're all clueless. Souk, is it Souk? Well, the thing about the clueless thing is open-mindedness. No prediction. I always say I'm clueless, and because the participant behavior, I can't predict it. So what I can do is observe it, and then understand what creates this, what creates this. So this is your support, this is your resistance. You see how we test the support. Now, subject to how you manage your trade, your stop is going to be at this high volume. And you could see how and then this pulled, and we could not get below here. You see, so you can narrate this. Now, if depending on your time frame, you're either, when you see this and it comes back, once it takes this out, you want to be out. You could even turn around and get long. Because now you know this is too low. And in other words, look at the volume, you see. This is too low. This was resistance, right? Resistance, break, too low, come back, too high, chop, chop, chop. either breaks down and comes here or breaks high. And now we're looking for 5,300 and overnight mid. By the way, this is a location now. We're just check the location of that 97.95 for rotation. If you hear something that says confirm order, I don't know if you're hearing it, but these are areas that I have identified. So in case I fall asleep at the switch, these are all done as the market develops, that I know they're areas of behavior. This is a potential short rotation location. That's all it is. So it doesn't mean I get short here. It means I wake up and smell the coffee. This is, at the moment, too low. This is too low. Let's see the behavior. So this area here is support. There's the volume. This is suggesting a rotation. This behavior that I've identified, and why, look where we are. You see? So now the support is here. It's an area. There's no precision, by the way. It's right here. So if I take this out, then all this can happen. If I don't take it out and I see my rotation up, you see? So I know that I need to be observing the behavior in here and here. So right now, this is my outside edge, that volume. Let's see the behavior. Now, this could become very scalpy, and this is not anything I suggest anybody do. It's really more about narration and anticipation, not about you trade this. Because in order to operate in this, you got to be pretty fluid. So what I do is in TraderLab, we talk about the broad strokes. Because you will find in TraderLab, once you understand, and the idea of the structured trades and those 60 PDFs is to help you understand market mechanics in a structured way. Once you can read it, you will see these mechanics, market mechanics, evolve in all fractals and timeframes. So the microstructure. So this is a potential rotation. All this is telling me right here is that I was anticipating a rotation. Then, subject to the time frame I operate in, I know I have landmarks. I have this because my buyers were activated here. I know that. And I have this because my buyers were activated here. And one of the ways to think about this, there's a couple ways to think about it. There's stops under here. There's stops under here. The other part of it is if the buyers perceive this as too low, they may activate again at these areas of demand. If we come under here, then we're taking the trailing stops out, and then we can sequentially come down. And then we have here, we have here. So we have a couple areas. So let's see what they do. Now, this is too micro for you guys to be trading, okay? In my opinion, at least if you're developing. This is very nuanced. And most of us cannot operate in this unless we got a lot of experience. Let me show you the microstructure. Here's your volume. Here's your buyer. There's an iceberg. Who knows? Volume is there. Sellers. Test. It's clear in hindsight, isn't it? But this is where we were looking at it. So this is too micro for you guys. But you can kind of see it. Now, this is, who's asking me about low volume nodes? This is an outside edge of this distribution. There's stops under here and under here. So let's see what it does. And listen, the way this can work is we may just pull back to one of these areas. When I operate in this time frame, which again I'm going to say is maybe not for most, unless you really have some experience, and you vet it. I look at the high volume as VPOCs, and I have to scale. If I'm trading in this time frame, which I don't recommend for anybody, maybe even not for me, at days I do sometimes think about that, I have to scale in front of this. Or see, so this is very tight because the high volume is here. So what I do is I monitor it. I look at it. I go, well, I might get a bounce here because of these buyers. I also know day traders like us are going to have their stops right there. So you have decisions. You could trade to the volume or you can trade to the stops. There's the stops coming out. There's an iceberg. And then you'd scale. Then your stop on this trade is above this volume. If you were scalping, okay? The other side of it, let's go the other way. This is too low. We pick the stops. If I don't get selling below here, then I'm at a low volume outside edge and I can do this. And if I come out the top, I'm going to my overnight mid. So there's two ways to play it. What's your time frame? So I don't have an opinion, of course, because I'm clueless. But you can be, this is just the way you can operate in this. Does that make sense? Costello, these alerts you're hearing, they're in IRT. Tim, the purpose of the TraderLab is to give you tools, and then you have to vet it. Nobody should do what I do. I trade this kind of stuff. I sell this, cover this. You know, I buy this and come back here. I mean, this is what I do among everything else. But it all germinated, if you will, out of what I share in TraderLab concepts. And then what you do is you find your, I mean, this is very hard to trade. There's no range, you know. So, and I'm just showing you market mechanics and structure here. How you trade is what you do. That's your work. That's when you come to TraderLab. And this is why when traders go to chat rooms and all this and trade calling rooms, they can't do what the other person does. Otherwise, we'd all go to the one chat room. I would have paid anything back in the day to have somebody show me how to do this and then just follow. In other words, replicate. And then I'd have an ATM in the basement. Why does everybody hop chat rooms and follow this, follow that, pay subscriptions and fail? Why does that happen? That's why what I don't want to have happen in TraderLab, because it's kind of like everybody learns kind of gets their groove, kind of psychologically what you can relate to. It's about understanding how the market works. That's what these are. These are fractals. So this is like microstructure of the same thing we do in a higher time frame. So if you can understand why this happened, you can take this and then extrapolate it into the same reason why this happened. And this is still your support. And we tested it. This is your support. Break high. Same structure. And we tested it. Still a long, subject to your time frame. You see it? Or let's just to make you nutty, rotation short back to support into the stops. Support. So subject to time frame, you're only trading the longs, or you're scalping counter trend, or you see the short into the long. So you see the short, you don't take it because of this and that and this to that and this to that and this to that. You see? And then so you are sequentially, so if you're in this time frame, you're only on the long side. If you're in this time frame, you're a scalper. Or you see the counter rotation, you see the short trigger, and you go, I'm not getting long. I'm sorry, I'm not getting short here. I'm looking for this. Now I have a trigger. I'm looking for my locations for getting long. Does that answer your question, guys? This is trading in fractals. Tim, does that answer your question? I'm narrating behavior in multiple time frames in what I call fractals. Time is not a component. It is the participant behavior. So I threw the clock out from my trading many years ago because we start out with time frames. That's, kind of what we do. And that's fine. Except the market participant behavior is not regulated by the clock. It's regulated by them. So I'm not waiting 5 minutes for something that might take 30 seconds or 1 minute. I mean, nothing. I'm just looking here and I can read this, which gives me this. Now, when it comes down here, this behavior gave me that. If these buyers think this is a deal, remember I said this. I said, if these buyers think this is too low, notice the aggressors, and we have this volume here, if I return towards it, it may activate these guys again. Oh, I want it. Oh, it's a deal. It's too low. Is it really? Yeah, it is. Longs. So short counter rotation. Long into this time frame. Long with these guys. Back to the clear this, high probability. This is the target. Are you guys tracking? Does this make sense? Not trying to make you nutty. If you feel like you're on a whirling dervish, it's not really what it is. What it is understanding market mechanics. This is what the TraderLab is. And if anybody wants more than that, I can't offer you more because you're going to take this information and you're going to take structured trades. That's a platform for you to build a template of process engineering, if you will. And process are conditional statements that create a branch logic linked to a structured trade or setup. You guys call them setups. I call them structured trades. Why? Structure. And then context. What's the context? Right now, buyers go, hey, bargain basement. And what else do we have? Based on the stats available to everyone at no cost, along with 60 PDFs and a library of webinars, 68% probability we get here. Not a trade recommendation. And what else? Notice what's hanging out in the book. Here. Is that a coincidence? I ask. What do we think? Is this a target? I'm going to say yes, and it's not a trade recommendation. Is everybody tracking? Does this make sense to you? Please give a thumb up. If you're visiting in YouTube, leave some comments. Any suggestions, anything, you'd like, let me know about it. I'll see, if it's something I can replicate for you in the limited time we have. It's important, subscribe to the channel so you get notifications. The TraderLab is a community of traders that are leveraging their collective experience. There's not one way to trade, and it's very much a personal journey. We all, it's not plug and play. Wouldn't it be nice if we could just buy, plug and play? We'd all have an ATM in the basement. Doesn't work that way. If you've been at this for more than, a day or a couple months, you're starting to you're going to figure it out. You're going to figure out that you got to find your path. But if you have tools, a community that'll support transfer of information, which leverages, hold on. I'm getting a rotation coming up here, actually. These are levels I already have, but that's besides the point. No, they're only giving me things that kind of, like I say, it's a slap in the face with the cold fish. Wake up, smell the coffee. These are longs, so that's all I got in this context here, and then go in there. Please give a thumb up. Let me just show you what these look like. There's a link in the bottom of YouTube. There's no cost to visit TraderLab. Download the resources. There's a library of webinars, many different configurations of behaviors, trend days, rotational situations, Acapulco cliff dive, explanations. Now, these are done many years ago. I'm not a vendor. There's no course. It is providing you with tools, things you can do. Some explanations. This is from 2020. And some of these are actual trades, and others are just screenshots I grabbed. I never intended to stream. Bookmap asked me if I would do it, and it was, that's not what I do. But I do trade in the morning. I trade early, usually. If there's something going on, I'll trade ETH. I trade up until I do the stream because I can use a break, and then I pick it up again in the afternoon if I have something that shows up. So anyway, these are available, no cost. Click the link in the bottom of YouTube if you're inclined. Visit TraderLab. Give a thumb up in YouTube. So this is our next thing, not a recommendation. Remember, the outcome of any interaction with the participants, just like in the casinos, is random. Nobody knows what's going to happen. Somebody trips over a cord at the CME. Anything can happen. So when you're in the market, remember, you have no control over the outcome. How do you measure yourself? It's not your P&L. There's a random distribution of outcomes. You measure yourself. Did you follow your plan? You can always change your plan, tweak, tune, vet, improve it, add more trades to it once you understand how it works. Overnight mid is the next target. And then we have we have something above there also, but we're just looking at this behavior. Final questions. And thanks for visiting TraderLab today, guys. Post your questions up there, and I'll do my best. Or come, if you have further questions, come to the Bookmap Discord TraderLab chat. Remember, it's no cost, and there's a link in the bottom of YouTube. Yeah, Jason, well, thank you. If you're in YouTube, by the way, if you're in YouTube, these streams are available exclusively to Bookmap Discord TraderLab participants, plus ongoing narration, discussion, and camaraderie and mutual support in the Bookmap Discord TraderLab chat. It's a community, and there's no cost for it. I also do well, let's just say during the day when I can, I will post in the chat. I also will do audio updates at times, or recaps, or just discussions, psychology, things of this nature. Everything is sort of ad hoc. But these streams are exclusive for the Bookmap Discord TraderLab. And a lot of resources are exclusive. But that's not a subscription. It's really, Bookmap is really all about education. They support their users with advanced tools, education, and having this community really is, we want traders to succeed. And there's a process to this. If this is a business, and if you understand and treat it as a business, it's not a video game. And many who come into this think somehow it's a video game. It's not. It's a gaming business. And that's pretty much the way to handle it. And right to my level, what are you doing? By the way, when I say my level, they're just things I do. I got to move something over here. Hold on 1 second. My location was sitting around 97, and these are sitting out here. They're just ideas. I experiment and research. I'm never going to stop. I've been doing this going on 45 years. I will never stop trying to find anomalies and behaviors. You will never stop. but you got to start correctly, in my opinion. Correctly is understanding how it works, not what it'll do. When you understand behavior, you'll be able to anticipate behavior. You know now there's stop sitting here, there's stop sitting here, there's stop sitting here, there's high volume here, the buyers came for it, there's high volume here, the buyers came for it. We pulled back to the volume, the buyers came for it. It's still a potential long, not a recommendation. And this is our next target. Also, never a recommendation. Please give a thumb up on your way out in YouTube, subscribe to the channel. Click the link in the bottom of YouTube if you want to download the structured trades. You can reverse engineer, visit TraderLab, hang out with a great group, a serious group of like-minded traders, not romper room. It's business. If you're interested in the business, visit the TraderLab. If you're looking for a good time, then this isn't the right venue. This is really about developing career. And if you're interested in finding out about it, come to TraderLab, ask the traders there what their experience is. And not only what their experience is as far as their development, but what they wish they had done differently even when they came to TraderLab. Thanks again, guys, for visiting TraderLab. Look forward to seeing you tomorrow. Trade safe, manage your FOMO, have a trade plan. It's the only way you can hold yourself accountable and measure your behavior. Looks like we're getting mean reversion. Who thought, right? There's no way to know. Remember, the behavior is random. That's why what I do, I'm just going to give you this for a second. I look at the structure. Too low. Here's my buyer. There's my seller. Going to the moon, Alice. Where's my sellers? Here and here. Your stop would be here or here. You're out. Pullback. Test of the volume. Reversal and mean reversion. No way to know. You just have to always be prepared. Anyway, thanks again, guys. Appreciate you visiting TraderLab today. Click the link in the bottom of YouTube if you want to visit TraderLab, and please give a thumb up. Appreciate you guys stopping by today. Talk to you soon.